Welcome to the BIS Innovation Summit. This is the session on faster, cheaper cross-border payments. Is wholesale CBDC the answer? The G20 has made enhancing cross-border payments a priority. At the same time, the payments landscape is in flux. Retail fast payment systems are being established. Central banks are revisiting access to real-time gross settlement systems. Central bank digital currencies are moving beyond experiments and prototypes, and standardization is gaining ground. This panel looks at the potential of wholesale CBDC in particular to make cross-border payments faster and cheaper. My name is Tobias Adrian. I'm from the IMF, and I have four outstanding panelists with me today. The first is John Cunliffe, Deputy Governor of the Bank of England, Chair of the Committee for Payments and Market Infrastructures, and co-chair of the Financial Stability Board's Cross-Border Payments Committee. Secondly, Cecilia Skingsley, Deputy Governor of the Riksbank. Third, Javier Perez Tasso, CEO of SWIFT. And finally, Umar Farouk, CEO of Onyx by JP Morgan. Welcome to this panel. I'm looking forward to the discussion. So let me start by turning to John Cunliffe to give some of his opening remarks.
Thank you very much, Tobias, and thanks to the BIS for the invitation. Before I dive into wholesale CBDC, I might just start with some general, quite high-level remarks about what I think you call the payments landscape. And then perhaps I'll talk about wholesale CBDC and where it fits into the G20's roadmap on improving payments, which is a lot of which is being led by the CPMI. And then finally, I might just say a few quick words from Bank of England perspective, if you'll permit me. So I start rather than with a roadmap analogy. I really start with a parallel from biological evolution. But biological evolution, we know, is generally slow for most animals, at least. But at times of geological and environmental change, it can be very, very fast, actually, and very diverse. And the evidence of the fossil record is that there's a bewildering number of life forms that appear when you get those sudden environmental changes, and they emerge in a relatively short period. Of course, many don't survive, many do and manage to coexist, and then the system settles back down into a slower pace of development. And I actually find that quite a helpful lens through which to look at what's happening now in payments and how, if you like, the roadmap for improving cross-border payments needs to be flexible and adapt. So I'm hoping that when at some distant time in the future, people look back at the payments fossil record, if I can put it that way, they'll see that we were in one of those periods of very fast change, but that we came out of it in a better place. It's technological development, of course, rather than geological change that's causing the radical change in the environment. But the effect is very much the same, and we're witnessing a proliferation of what you might call payment life forms. We don't know which ones are going to survive. We don't know which ones are not. And of course, we don't know how they will live with each other afterwards. So if I turn and try and look at wholesale CBDC through that lens, actually, strictly speaking, wholesale CBDC exists at present because wholesale settlement in central bank money, I think, is digital, just about everywhere. And central banks, of course, are working on the future of those existing digital wholesale payment systems through upgrading their RTGS and other infrastructure. But I think what we're talking about here are newer tokenized forms of wholesale CBDC, and they're starting to emerge, those life forms, at least in experimental form. And they may offer a great deal in terms of improving the speed, reliability, and functionality of payments. I mean, they may make a big difference, potentially, depending how they're designed, to full 24/7 operation and seamless transaction, to enabling broader access to settlement, and to creating kind of interoperability between different wholesale payment systems. And of course, those are improvements we're trying to get for the existing way, but wholesale CBDC may offer just a much more effective way of doing that, with the prospect of greater functionality, things like atomic payments and smart contracts. So how do we fit that into the G20 roadmap for improving cross-border payments? Well, the roadmap, first thing to say, is it aims to be comprehensive, and it addresses a large number of very different areas. But at its center, three of those areas relate to the challenges posed both in the public and the private sector by legacy technologies, and that require significant investment if we're going to change them. At the center is the use of truncated and very fragmented data formats, and then the problems that arise from long transaction chains. And I think it's in those areas that this sort of technological development, whether it's wholesale CBDC, whether it's stable coins, whether it's new payment platforms that some have proposed, could offer solutions. And the roadmap therefore includes precisely work on these new areas to see what they can offer and how they should be integrated. That work is led by the BIS Innovation Hub and the CPMI, and actually Cecilia is leading that work within the CPMI. And we're hoping that in that way the roadmap can be flexible. It may be that one payment solution, one life form becomes dominant and everything else disappears. But it's certainly probable that new things will emerge and the roadmap will have to change. It will have to adapt, and some things will become more important, some less important. But we hope we've designed it in a way that over time it can be flexible and adjust, looking to the future at the same time as we try and improve the present. And I'll just briefly add a couple of very important points around that. The first is there are elements of the roadmap that will be important to all forms of payment, no matter what the technological development. We can get greater consistency in the application of compliance around things like illicit finance. If we can get more harmonization and agreement around how to apply data regulation, just lining up regulation generally, I think, is going to make a difference on cross-border payments, no matter what technology you're operating through or over which rails your payment is traveling. And it may, as I say, be that one form comes to dominate, but it's much more likely that for the foreseeable future, there will be different payment systems and different rails. And getting a payment from A to B may involve switching between payment rails at some point, out of the wholesale system into the retail system, or between rails that don't currently exist. And again, we have to ensure that that form of interoperability is present. And the last thing is very obvious. This has to be done by the public and the private sector together. If we don't work together on these changes, we won't get there. And finally, just these points are illustrated, I think, by what's happening within the Bank of England. So we're in the middle of a pretty ambitious renewal program of our RTGS system to produce the next generation of sterling RTGS. And we hope that'll put in place many of the things that are called for in the G20 program, ISO 20022 messaging, expanded operating hours, much broader access, read and write APIs. But at the same time, of course, we're engaging with the wholesale CBDC ideas and proponents. And we hope that by bringing the two together, we can assure that we can move forward with what we have, but actually take advantage of the future. I'll stop there. Thanks.
Thanks so much, John. We turn next to Cecilia Skingsley from the Riksbank.
Thank you, and hello everybody. Well, I think I can echo very much what John Cunliffe very elegantly described as a sort of high-level principles of what we try to achieve. And if I take a couple of steps back from what we try to achieve, I think it's frank to say, obvious to say, that we have reached a time in history where we have to realize that the money transfers and the payment in the way it's serving the general public is not up to scratch. It's not as good as it should be. It works pretty well between advanced economies, but the longer distances you want to send money and the more extent you want to send money into emerging economies, the autostradas of the advanced economies becomes more like dirt paths as you try to make longer payments. And just to give you one example, if I would like to send the equivalent of 100 euros from Sweden to someone in Uganda who doesn't have a bank account, I would have to pay as much as 50 euros. So 50% of the money transfer disappears. And this is not a very good result. And we all know why this is the case. We have a payment market is not a contestable market, and the economies of scale and the network effects is something that hampers competition. And I think the Facebook Libre initiative, in a way, we on the public sector side should be appreciated for what it is, which is a wake-up call for all of us and rethinking how do we facilitate competition and efficiency. So I'm very happy that the BIS is taking a leading role together with other international organizations, IMF, World Bank, and the FSB. And this is an area I think we need to be bold and we need to persistent and patient if we are to be successful. I think in order for this really to fly in the years to come, I think each country, first of all, has to look at their own payment market and ask themselves, are we doing this for our citizens in a way that is safe, is efficient, but also inclusive? It needs to work for everybody. Or is there a need for an overhaul of the infrastructures in a way that improve the meeting of these objectives? And I think standard features in any country going forward are infrastructures like fast payment systems and digital IDs, identifications. And then on a global scale, we need to think about how to connect the countries. And in my personal view, choosing between costs and speed, I think costs is the most important thing to address. But if we on the public sector side manage to provide the private sector side with enough competition, I think it will both solve both things, push costs, but also have nothing against speed. That will be improved as well. I think when it comes to priorities, I think corporates and financial institutions have been relative term already satisfactory rails. At least they have more choices, while the real improvement could happen in person-to-person payments and person-to-business payments. And when it comes to wholesale CBDC, I think that could be a possible solution, or one of the solutions. But it's not the solution. It's not the objective that we get it to at any price. And I think there is a number of important steps that can be taken in the building blocks that has been outlined. And one first step could be for central banks to allow for broader access to their settlement systems and also longer opening hours. I think standards, obviously, is a key feature here, that we at early days agree on the same standard, and preferably that one payment service provider, if that is allowed access in one country, it would also get access to operate in other countries. So being bold, being persistent, and being patient, I think, are the things we have to be on both the public and the private side. I think it's building infrastructures that are the key feature for us on the public side to do, but also regulate and supervise the private sector in a way that meets the objectives that we want to achieve. And I'll stop there.
Thank you, Cecilia, and thank you, John. So our panel has two public sector participants, John and Cecilia, who gave their perspectives, and we'll next turn to two private sector participants. So just to give a brief midpoint in between the presentations, both speakers pointed to the policy objectives of greater inclusion, having access for all to international payments, lower costs, higher speeds, and digital identities. And the importance of the partnership between the private and the public sector was mentioned in particular. So let me next turn to Javier Perez Tasso, who is the CEO of SWIFT.
Yes, hello, and good morning, everybody. I also quite appreciated the introduction of John Conliffe about the situation and actually the problem statement that we're now facing, and as part of well, I would say an industry-owned cooperative, SWIFT, that they represent. Maybe I'll give you my perspective from actually giving a bit of context of where we come from. As you know, SWIFT today is the one international payments provider for the industry, carrying today millions of international payments safely and securely. That's what we were created on by the industry 40 plus years ago, and we do that on a daily basis. This said, and taking that perspective of trying to enhance cross-border payments to new levels, and as Cecilia said, both addressing speed and cost. Over the recent years, we focus on improving that service that banks provide to their end customers, whether they are consumers or corporates, institutional clients, so that actually today with GPI, it's a new service that allows banks to track and consumers to track payments across the SWIFT ecosystem. We see that essentially in practice, 42% of the payments are delivered to the end beneficiaries today already within 5 minutes. And a bit more than half, I think it is 56% of all payments are delivered in less than 30 minutes, and almost 100% of all payments are delivered within 24 hours. And this is a significant evolution since over the past 5 years. And by the way, important to note, it's at the end beneficiary, it's not just the recipient bank, is the beneficiary having the access to the money in their accounts. This said, with the new strategy that we've now taken on board, we are thinking about taking this to the next level, and essentially across the whole ecosystem to provide instant and frictionless transactions, account to account, anywhere in the world. And we're talking about, 4 billion accounts globally interconnected, including the domestic payment legs. We know that today already many of the payments involve at least one domestic payment leg, and obviously this is going to increase in the future with the advent of real-time domestic systems at practically all countries. And the key, and it was said by both John and Cecilia, is to interconnect, to interoperate all these domestic systems, which is what the industry now is going to do in an instant and frictionless way with the new platform that we're building on board, a new digital platform that would be based on cloud technology and APIs, precisely to achieve this objective. And in that sense, I have to commend both Cecilia and John on the great work that CPMI has done in terms of describing very clearly the focus areas and the building blocks, the 19 building blocks that are looking at many issues that actually we're seeing today, and we actually are visualizing today already with GPI friction that we can see, such as different data requirements between jurisdictions. It is the case. Financial crime compliance, it was mentioned. Differences in the operating hours as well. Very important point, and Cecilia touched on the maturity of the receiving country infrastructure is also very important. Obviously, this would be upgraded in due course to real-time payment rails. But it's interesting in our stats that we've seen that 80% of the time that the payment takes, 80% is in the receiving country. So that's why it is an area that obviously is not only linked to the clearing systems, it's also linked to sometimes local currency controls that are obviously a matter of economic policy. But the way they are implemented is also a major factor in slowing international payments. A point on innovation, before touching on CBDC, is that it's another area of focus for us. We remain deeply committed to essentially working on co-innovation with the industry, co-creation with the industry. And one recent example that I want to highlight as well is the hackathon that we did with BIS on ISO 20022 and APIs in cross-border payments. Again, great work done with BIS on that matter. Maybe to conclude my opening remarks on the building blocks that are directly impacting the industry as a whole. We can, of course, look at CBDCs, which is, of course, the topic of today's session. And I think the big attraction of CBDCs is that they combine the exchange of value and its settlement in one digital process, which is, of course, very promising. But at the same time, I think it needs to be said that it doesn't necessarily solve for all friction points that payments today actually have. For example, compliance checks, KYC controls, different local data requirements, currency controls, as I said, and so on. So, of course, I think as well we need to realize that, as we all know, that payments are linked to four things, and a payment is part of a trade, involves credit decisions, requires liquidity. So it does need to integrate whatever the future landscape is built on. It will need to integrate with what's it for and the requirements that are around it. So there are a lot of complex issues that I guess we're going to talk about it during the panel today that yet need to be understood properly. But I do see an exciting time as private and public sector build out on infrastructure for CBDCs and beyond. At SWIFT, as I said, we're asking ourselves the question about how we might facilitate interoperability between fiat, digital fiat, and token-based currencies, but as well about the different underlying technologies that support them, whether they are DLT, APIs, or other. So for us, getting the foundations right of the bigger picture is fundamental for serving the industry. I think a lot of front-end innovation has happened over the past few years, driven by PSD2, open banking as a whole. But that innovation can just be successful with this right foundation without cutting corners on risk and control, which is obviously paramount. So I'll pause there.
Thank you, Javier. Let me just pick up two themes before turning to Umar. So one theme is that there might be a diversity of technologies that will coexist, some being account-based, some being token-based. And that very much resonates with what John Cunliffe had mentioned earlier about the multi-pronged approach in terms of thinking about future payments. And that, of course, is one of the themes of this FSB report that Javier mentioned that was chaired by John Cunliffe as co-chair of the FSB Cross-Border Payments Committee. That was a report that went to the G20 in October of last year and lays out 19 work streams at the international level to improve and reshape the future of cross-border payments. So with that, let me turn to our fourth speaker, Umar Farouk from JP Morgan. Umar.
Thank you, Tobias, and good morning, everyone, or good evening, whenever you're listening to this. It's a pleasure to be here with John and Cecilia and Javier on this panel. I obviously represent the fully private side, so to speak. I know obviously Javier is there too, but it's infrastructure, and coming from JP Morgan and sitting in Onyx, which is JP Morgan's business unit that houses, amongst many other things, all of our tokenization work, whether that's in the space of currency or other assets. And we've done, as many might know, we've done a lot of work, obviously, in the coin realm, both in terms of JPM coin within our own infrastructure, but also working with MAS on Project Ubin and doing other work ongoing in places like Singapore. So I was going to talk about, frankly, a couple of things. One was, I think when you think about the current infrastructure for payments, so the entire infrastructure, I mean, I tend to be somewhat of a simple person, so I think of it almost as, kind of a layer cake. So at the very core is, you can call it the payments operating system. And the operating system is run by central banks and infrastructures like that. Then above that, you could have, sort of quasi, public-private type layers. Then you have Swift, and then you have, people like JP Morgan on top. And then, frankly, on top of that, you can even have, other technology companies, because again, as I think others referenced, especially Cecilia, I mean, increasingly technology companies are getting into the payments realm, and payments are becoming a critical part of their infrastructure, their offering, et cetera. And that's, sort of resulted in this explosion of innovation in the space. So when you think about this, I think there's been lots of innovation at the top layer. But there's not been a tremendous amount of innovation at the core layer or the operating system layer. So I think in my mind, what we are here discussing is how do we think about the operating system evolving itself? And I think CBDCs is frankly one very exciting way they could operate. They could evolve as an operating system. There's also other ways they could evolve. So, fundamentally changing the RTGS systems, making them real time. Frankly, even in some cases, the top layer right now, which is the payment providers or tech companies, non-banks, could have direct access to the operating system. Many jurisdictions in the world are now increasingly allowing that. So I think all of that is an interesting set of developments. But when you think about the end-to-end wholesale payments, and leaving retail aside for a sec, to Javier's point, they are relatively quite efficient, but they are efficient for select corridors, and they're efficient for select currencies. So obviously, G7 or even G20, they work really well. I think increasingly the world is moving beyond those corridors. I mean, especially with the rise of global trade. I mean, despite the setback with the pandemic, I mean, we are going to be in a secular move towards the world being able to transact easily, move goods, move money across borders, across all sorts of currency pairs. And I think we need to have more solutions that can evolve and handle that. And we can't really live in some of those cases with a T+2 settlement, or possibly even longer in some cases. But when you then come back to CBDCs specifically, and this is the sort of second part, I mean, there's a few things I think we all have to consider as a group. I mean, whether you're in the public sector or the private sector. One, which I always sort of start with whenever I build something, is what problem are we trying to solve? And don't get me wrong. I mean, I by the way, fully agree with Celia that when you come to P2P or C2B type payments, there are challenges. There are challenges, especially when you cross borders. I mean, we all know that it's a well-known fact. There's people who are remitting small amounts of money from places like the Middle East to Sub-Saharan Africa and paying significant fees on that money. And these are not large payments. And so there are retail use cases that need to be resolved. There is an inclusion issue, which is especially inclusion in the digital economy, which I would almost argue is now increasingly a basic financial right, if there is such a thing, for people to be able to, transact with that economy. But when you shift to the wholesale side, I think the question is, what are we trying to solve? And what is the best way to solve that problem? Is it instant settlement for large transactions? Is it money movement? And what would be the advantage? So I think some of those questions, hopefully we'll discuss in the panel, like what are these issues in the wholesale realm that, would require a CBDC to solve them? I think the second thing in my mind is frankly the technology question, because again, I think Javier kind of talked about it. This in the CBDC realm, especially if you take a tokenized approach to this, it is impossible to disentangle the transmission technology from the value technology in the space. And it's a non-trivial task to figure out why and how to do that. And then I think, the third one, obviously, I realize that there could be macroeconomic or global macroeconomic factors that drive the adoption or the interest in CBDCs at this level. I mean, there could be, sort of global. There's some studies out there about a global level of FOMO, which is fear of missing out, because China is doing something, or and Cecilia's group is coming up with something. But frankly, I'm neither competent enough or crazy enough to take on that debate right now. And so I think all these questions fundamentally have to be answered. And I'm not even getting into like the macroeconomic impact to some extent of CBDCs being held directly by corporates, et cetera. So I think there's quite a few questions, but that doesn't detract from the fact that this is a very exciting new technology that could lead us into directions that maybe we haven't envisioned yet. And I think, again, just to close out and tying something with Javier, I think when I think of CBDCs and the work we do in crypto and similar technologies, I think the real power of this is the programmability of the platform itself. I mean, we can make potentially money smart, so it protects itself from money laundering versus us having to do identity. So when you start combining those factors, I mean, you can create something very powerful and very futuristic, which I really believe we've only scratched the surface. So I'll stop there and maybe turn it back to Tobias.
Thank you so much, Umar. And thanks to all four panelists for fascinating opening remarks. So let's kick off a discussion. I really would like to see how you all react to each other's remarks. And I think two of the themes that have resonated with me in particular is this question of how do account-based systems, so these are the traditional payment systems, are account-based, where payments are going from one company or from one person to another through accounts, and banks are really at the center of that system. And then there are the new technologies, which are token-based, which are sort of like digital forms of cash, and they're not necessarily tied to a person or a corporation. And of course, Sweden has been at the forefront of making CBDC into a reality. We have also seen that the Bahamas has been the first country to roll out a CBDC. And this session, of course, is on wholesale CBDC. So CBDC that only operates among companies and financial companies in particular, not among individuals. So it's not a retail, but it's a wholesale. So that, I think, is one question. So how do we shape the system to then meet the policy goals of having greater inclusion, so access for all? I think Umar mentioned that access to payments is a bit like a fundamental human right. So how do we make sure that everybody in the world has access to payments at a low cost and high speed, without putting at risk the safety and soundness of the system? So let me perhaps first turn to Cecilia to react to what she has heard from the other panelists.
So thank you, Adrian, Tobias, and Doris, Adrian. When it comes to the account-based versus token-based, I think it makes sense to sort of distinguish them to sort of sort out the discussion, because money is a complex thing. But I don't see it's either one way or the other, that we should have one but not the other. I think they could perfectly well work together. But if you think about it, that's the system we already have today, because we have most of us, at least in the advanced economy, have our money on a bank account. So that's the account-based version of money. But we also have some as a token-based, which is our cash. And I don't see a reason why we shouldn't be able to do that also going forward, depending on each and everyone's need. And when it comes to CBDC as a sort of general purpose CBDC, I think there are countries which have financial inclusion challenges where a CBDC rightly designed could actually be of great importance. In other countries where the financial inclusion is not such a problem today or may not be a problem going forward, their CBDC, should they decide to launch one, would be more of a sort of a sideshow, more of a sort of default option that you use for resilient purposes, so perhaps for government to people transactions. So I think going forward that we will, if there is a world with a number of different CBDCs in different countries, we will see they play very different roles in their respective economies. And then there is an interesting question: should these CBDCs be able to go cross-border? And the jury is still out on this. I think there are a number of building blocks in the program that will help cross-border payments to become much more attractive and efficient. But who knows? Maybe CBDC could add value in that regard as well. And let me also point out one thing. I think we all agree that this is a sort of like a duet that has to be played back and forth between the public sector and the private sector. And it's very clear who has the greater advantage one way or the other: public sector infrastructure regulations, private sector innovation, and serving the needs of the individuals. But sometimes in history, and Sweden is a good example of this, the public sector has to sort of take the torch and run with it. And let me give you the short story about when the post-gyro system in Sweden was created. Early in the 1920s, the Swedish government got fed up with the fact that people had to send cash and checks in envelopes to pay, the electricity bill and things like that. And the banks didn't seem to be interested in innovating at all. So the public sector decided to set up a gyro system so people could pay in a safe and efficient way to very different companies' gyros. And it took the Swedish banks 25 years to accommodate this and put up their own system, which is called the bank gyro system. But after that, they never lose the torch again. So the Swedish banks have in a very impressive way cooperated about a joint ATM system, automatic clearinghouse, joint card system, and recently also the instant payment app Swish, so you can make instant payment cross accounts across 24/7. And I think that's the way it should be. But sometimes the public sector has to be quite forceful, and I think we are at that stage again now in history, but also on a global scale. Stop there.
Thanks, Cecilia. That's very insightful indeed. And let me just share that there are certainly countries where checks are still being written and mailed with a postal service. So the question that I would pose to Sir John Cunliffe is about the future-proofness of these initiatives. So how can you make sure as a policymaker that how you're innovating is going to continue to give rise to future innovations in the private sector or in the public sector, and what is the right balance? How do you think about the balance in between private and public sector innovation? I think we've heard one view from Cecilia, and the Bank of England is also on this road. So how do you think about this interaction?
All right, no, thanks, Tobias. I might pick up a couple of the other points.
Of course, absolutely.
Because I've been thinking about them. One, on your point about kind of token versus account, I think the more interesting distinction is ledger versus non-ledger. So we've got bearer instruments at the moment called cash, and we've got accounts, whether they're custodial accounts or whether they're claim accounts, bank accounts. And I have to say, at the moment, the area that looks more tractable are the ledger-based systems, no matter whether the ledger is distributed or not distributed. Creating digital bearer instruments, I think will pose another level of complexity. It's the problem of, which we've had with paper bearer instruments of forgery and duplication, which can be done at scale. So my sense is the technology is not as far advanced on pure tokens, which can be transferred because of what they are, rather than a record somewhere of who owns them, if I can put it that way. But who knows where this will go. On the layer cake, it may be that we can change the central operating system, but of course some of these rails don't need a central operating system. I think, and it doesn't necessarily have to be the stable coins that operate on completely different rails. The retail payment systems can be linked up as well through the credit card companies are kind of working on this, and only really coming into domestic systems for that last mile, the final leg. So one question, at the moment, a lot of cross-border operates in the end through correspondent banks, which in the end settle through wholesale, and we can improve that. But we also have to make sure that we allow for the other rails, if you like. That I think it's going to be less of a layer cake in future. I'd observe in passing that it's a layer cake, an autostrada, and a fossil record. So it's a ripe area for analogies. And I just wanted to pick up your question about what problem we're trying to solve. I think I'm very much agree with Celia. There are a number of problems in this area, but the most pressing one is particularly P2P and small business to P cross. I mean, if I look at where we've lagged so far behind, that's behind domestic systems hugely. But I wouldn't assume, it's interesting, Javi said, I wouldn't assume that the technology only exists in the advanced economies. If you look at M-Pesa, I mean, they started in Kenya, they're now moving into a number of countries, including the UK. And in a way, they've skipped several technologies to get to where they are. So it's not to be an automatic assumption that that's the case. And finally, on Tobias, turning to the question you actually did ask, which is about where's the public and what does the public and private interface look like? I mean, the other thing I'd add to Cecilia's example of what the public sector can do is we have convening power. I mean, we can solve collective action problems in the private sector. If you look at how CLS developed, or even SWIFT, you'll find central banks or the public sector played a role in bringing private participants together and coming up also with standards to which all private participants can adhere, which creates interoperability. I think there's a big question for us, maybe to ask, which is behind your comment, is do we need, apart from the center of the layer cake, if I can put it that way, or the middle layer, or whatever it is, do we actually need publicly issued money for citizens? Or can citizens rely on privately issued money, properly regulated, with the highest level being done, or the middle of the layer cake being done by the private sector? And of course, we have a bad history of private monies in a number of countries when they go wrong. But on the other hand, you can argue we solve those problems with regulation, and majority of our money in society today is private claims, not public. I think then that's a huge issue. I guess my view on that is, in the end, the confidence in money kind of rests on the ability of the holder to transfer it into the safest asset. And though they may never do that, the fact they know they can do that just anchors the whole system. And therefore, there is a reason for citizens to have access to publicly state money, or the safest form of money, publicly state money, or the safest form of money. Some countries, state money is not the safest form, but to have access to the safest form, because that's what, when stress really comes, acknowledge that they can do that with the system. I don't know if that's the question you were asking, but that will be my answer.
Yeah, thanks, John. Just giving a little bit of background. You mentioned M-Pesa. M-Pesa, of course, is the payment system from Kenya, and it's very much a telecom company that is the innovator behind that, together with the public sector, the central bank, and it has generated a tremendous amount of financial inclusion in Kenya and many other countries in the developing and emerging market world are looking at that closely and are implementing similar models. So let me turn back to Javier. SWIFT, of course, is very much at the heart of today's payment system. As John pointed out, it's a ledger-based system, and SWIFT is a messaging service. So it is a de facto standard that is a connective tissue across the banks around the world and central banks as well, right? I mean, SWIFT is used, I believe, by every central bank. So how do you see the interaction between this ledger approach and a more token-based or CBDC approach? And in particular, of course, this session is about wholesale CBDC. So that's the backbone, the rails that customers or companies typically don't see or don't think about. So how do you see the evolution of, for example, the SWIFT messaging system towards something that could be more token-based, or do you think it's just complementary? Is there a multi-pronged world that we're entering into? How do you think about that?
Yeah, thanks. And again, as John said earlier, if I can touch on a couple of points that were made, because they also made me reflect a little bit. Well, by the way, SWIFT is not used by all central banks, Tobias. It's by many, actually, the ones in this panel. Yes, Target 2 and of course CHAPS rely on SWIFT messaging infrastructure, but not all payments RTGSs in the world do. I think we have in excess of 100 globally using it. So, and actually it allows me to explain, because it's while SWIFT is indeed used by 11,000 plus institutions in more than 200 countries, the key purpose of the creation of the cooperative was to provide international transactions and to interoperate internationally across different business lines, trade finance, securities, FX, and of course payments. But indeed, many domestic infrastructures have also expanded the use of SWIFT as well domestically, providing an end-to-end set of standards and protocols that the ecosystem can use. But it is not a necessity to have, of course, domestic infrastructures, whether it is RTGSs, ACHs, or real-time payment system based on SWIFT. That is one option. The key purpose, of course, is to make sure that whatever the technology, whatever the standard, whatever the protocol being used at the domestic level by each of these systems, there could be a global interoperability, a famous word, that in that case is happening through, as John Conley said, through correspondent banking, through the banks, making sure that this is fluid and provide therefore liquidity to the system. So that is what we are now, of course, together with the banking ecosystem, improving and trying to make totally instant and frictionless. So to your question, maybe also to point out about M-Pesa, because I do think as well that at the domestic level, Kenya has been a fantastic example for many years already, but there are many other countries as well that are at the front edge of innovation and providing, the back end, the infrastructure, but also the front end that provide inclusiveness to all parties in that country. The key challenge is as I said, the end-to-end, the connectivity with across borders, across currencies, of course, and how this can happen. And for me, to your question, the right components, whatever the rails and whatever the operating system, if we use that word, that need to be based on, many of the issues and challenges that for payments based on CBDC are the same that for existing payment solutions today. And they'll need to be based on, of core payment system requirements such as fraud prevention, KYC, AML, transparency, data privacy, enabled, of course, by data-rich standards, especially ISO 20022, digital identity to combat fraud, and therefore, at the end, interoperability with all of these systems that will, in addition, maybe to add, will require foreign exchange mechanism and a scalable interchange one. So these are the challenges ahead. So can this coexist? Of course, and I think it's going to be a combination of rails, it's going to be a combination of protocols, of value, but I think all of these foundations need to be really cracked to be able to then power, unleash front-end innovation, as it has happened already now with many companies, PSPs, offering great services to clients directly.
Thanks, Javier. And so let me turn back to Umar. Many issues have been raised. What's your perspective on these important developments going forward?
So I'll pull on a couple of threads. I mean, I think obviously there's a lot of great work. I mean, that's been led by John, Cecilia, and sort of in related forums. Javier and we talk quite often about these issues as well. I think the real thing is there is a question of whether it's M0 or M1 or maybe even beyond, and what solves the problem. So I mean, our experimentation has obviously by definition been in the M1 category, because that's where we are doing JPM Coin. That's where we're doing some work in Singapore in terms of multi-currency clearing. And at least from our point of view, when we look at our wholesale customers, that meets their needs, because I think the problem they are trying to solve in many cases is they want to have atomic settlement of transactions. Recently we built an infrastructure to do intraday repo. So in the US, most of the repo markets are overnight, which is, again, very large scale, obviously wholesale, issue. They are overnight, and now because we can tokenize both cash using essentially M1, JPM and M1, and tokenize the securities, in this case, they are mostly US treasuries, and we can swap them for 10 minutes if you wanted to. And suddenly the way you deal with capital, the efficiency, how much money you have to put aside, how much you have to pay for certain things, all those dynamics change. Again, they may not appeal to sort of the person down the street, but they make a significant difference to, sort of global institutions in the way they operate, again, the core of the capital market. So I think that's one thing that's always, sort of running through the whole thing. Is it M0 or is it M1? And I think the second thing, which frankly for me, sort of was, again, I couldn't agree more, which is with John, that the layer cake is going to go obsolete. We just don't know how. I mean, because we are so early in the obsolescence sort of, trajectory here. We think it might be CBDC, it could be something else. The top layers are effectively building infrastructure. In some ways, the layer cake has increasingly become an inverted pyramid, to make it even more complicated. And you have a lot more people innovating at the top than you have people innovating at the core. So as John said, they're coming to you for for like the final settlement or something, but most of the action is happening in the private money realm, even above the M1 realm. So I think increasingly we're seeing this like Cambrian explosion of these solutions, retail. And I always believe like you start with retail, you will come wholesale. Retail is where innovation starts, because we all kind of understand it. We're humans, we have needs, and we can kind of like connect the dots. And then you will come to wholesale, and those same things like user interface, like data, like all those things which started in the retail space finally have now shown up in the wholesale space, in both money and non-money industries. So I think the way I think about it is I think we are at the start. Whether we go from a layer cake to a network of some sort, a multi-tiered network, a 3D network, who knows? But I think we have to keep our mind open, and we have to actually somehow suspend our own belief in our own right to exist the way we do today, which is kind of hard to say when you're sitting in the private sector. But I think the more we hold on to our current business models, the more there's a risk that you will be made obsolete by someone else. So again, I'll stop there. I know that's probably a bit extreme, but that's how I think about it.
Thanks, Umar, and thanks for all four panelists, John Cunliffe, Cecilia Kingsley, Javi Perez, Tasso, and Umar Farouk. This has been a fascinating panel. I think we could easily go on for a couple more hours, but we are at the end of the hour. Thank you so much for all of you. This is an exciting time where global payments are being innovated and disrupted, and we all hope that this is going to the benefit of all. Thank you, and thanks to the BIS for hosting this panel.
Thank you.